How are investors supposed to take all this in, and what are they supposed to do? Let's bring in Bloomberg's Alix Steele for more. Alix, I know you were on the floor of the exchange today. You had the China numbers, European political turmoil. Is this what people are focused on?
Yeah, absolutely. And traders are pointing out to me that the S&P futures bounced off the 1354 level, so that now providing some support. But the theme was definitely still sell into rallies. We had Mark Newton of Grey Wolf coming out and saying that 1388 is the game changer. That's when you can get more constructive on stocks. But until then, avoid tech, sell rallies. He's saying the utilities, consumer staples, healthcare, they all look overdone. My question was, are we oversold yet? And I got various answers from many different traders. Some said, yes, tech is oversold. Some said, no, not yet. Some said, I have no idea, wait for the Fed.
Oh, well, they got to wait also for the Apple results that'll come out tomorrow after
Absolutely.
the close of trading. Stay with me, because I want to bring in John Ryding here to give us a little bit of perspective in terms of the market, also what's going on in Europe. John Ryding is the co-founder, chief economist at RDQ Economics. John, good to have you with us. I know you're just back from Europe. So what do you make of the move, right? The Dutch prime minister says, all right, we'll all leave if you want us to, because we can't seem to figure out what we're going to do. The first round of the French presidential election goes to Francois Hollande, right, the Socialist Party candidate. But I think the big shock really was the National Front, right, the party of Monsieur Le Pen.
Well, when you look at all that, it's sort of feeding into this flare-up of European tensions again. And the markets have been very effective at removing governments from Greece to Italy. Probably looks like it's going to go that way in France.
You think that Sarkozy is going to lose round two?
That would seem to be what the poll suggests. So I'll go with the polls, not being a French political expert. I think when you look at all that, it's just creating anxiety about can we get the necessary agreements to push the fiscal agreements through from where they were in December when they were written down on paper to the ultimate meaningful reform. And I think that's going to keep those tensions. And the flashpoint, despite all of those political elections, is actually in Spain, where the new Rajoy administration is good for another 4 years. It's a 5-year term, and they're a year in, and I think they're making real progress. I was in Madrid, and I think the progress is more than what we see in these market fears.
So are the market fears then overdone? Because it seems like traders every day are trying to pick out all the negative data that they're getting from Europe, kind of as an excuse to sell. That's the vibe there on the floor.
Well, they're not overdone in the sense that the EU has put in place all the mechanisms that it really needs to make monetary union work. And so the question is, are all the mechanisms like the ESM and its predecessor, the Stability Fund, and the €1 trillion of lending done by the ECB, are all those enough to prevent things from getting worse? For now, and markets test that until what you really need to be in place is in place. But I think that Europe has shown that when it comes to the pinch, they will find a way to do it. So if things got really bad, I wouldn't rule out the ECB doing another €500 billion lending program, though I don't think that will be necessary.
I've been waiting to use this all day, John. I keep thinking that the French voters voted no, right? I mean, they said no to austerity, right? I mean, isn't that really, can't you take that away? Because you also have the situation where the head of the Bundesbank in New York, the German central bank, coming out and saying, you know what? It's a diet of austerity, and this is what you need to live with, because if you think we're going to be writing any more checks for the European Union to bail out the banks or the governments, you've got another thing coming. Is this just rhetoric from the head of the Bundesbank?
Well, I think what we've seen in the case of Germany is all along the way that they say nine, and then they ultimately give a little. Now, Germany's doing quite well inside of a difficult European situation, and they're implementing their own fiscal austerity. There is room for Germany to be more expansive and take some of the relief off the periphery. And I think ultimately that will come. But the German economic data, put aside these ISM numbers, you look at
manufacturing
data. You look at other data out of Germany, and Germany is doing pretty well. Now, as for France, one of the things that's going on here, of course, is if Hollande wins, in principle, that doesn't sound so good, right, for the system, to get a socialist government in place. But he will push Germany for expansive policies. And I think ultimately we need to shift the focus in Europe from a pure diet of austerity to some mixture of austerity and economic growth measures.
So then let me extrapolate this to the gold market, gold trading around, 1639. What does that tell you? It seems like you could look at it a couple ways. One, nothing solved. Currencies are still bad because gold is still at 1639. Or is it saying because we're not at 2000, is that somehow instilling some kind of confidence in the euro and the U.S. to get their fiscal house in order?
Well, I think that's a very good point. Actually on gold, we changed a multi-year position in terms of our views on gold, which we've been unabashedly bullish on the debasing fiat currency, fiscal problems, but tied in with the FOMC coming up too. I don't think there's much chance of QE3, and I don't think we'll get any hint of it coming out of the Fed at the FOMC meeting later this week. And so I think what gold is telling us is there's a fight going on, but we are so much higher than we were. No one can figure out what a fundamental price for gold should be on any kind of model. So you have a lot of people of profits from $500, $600, $700 an ounce ago. And if gold doesn't come up, I think at some point people get nervous and we get more of a pullback. So we have kind of said, okay, enough's enough. If the Fed's not going to debase money more, if Europe's not going to fall apart, then some of the rationale for getting even further into gold disappears. So then it's a fight between the bulls and the bears and who gets more nervous. And my betting is that if we were to see a little bit of a more pullback here, you could get a bit of a self-fulfilling route for $100 or $200 an ounce. Who knows how you can't figure out gold's fundamental value.
John Ryding, you said you just returned from Madrid. What gives you confidence that the Spanish are going to be able to fix some of their problems? They've got, what, 20 to 25% unemployment. Youth unemployment is at least maybe a fifth of the workforce. You have local banks calling on the national government in order to bail them out, and you still have a housing crisis because so much was built, and it was built with borrowed money. What gives you confidence that the Spanish are going to be able to dig out from this?
Well, first of all, they're in a much better underlying fiscal position than many of the other European governments were in the sense of where their debt to GDP target numbers were coming into this. They were well below 60%. In fact, Spain was the only European country within the original EMU members to meet their Maastricht targets on deficits and debt all along the way. Secondly, reforms are being undertaken in conversations that we had. The area that needs to be addressed is the autonomous regional governments, and there's a lot that goes on over the next 3 months in the debate between the national government and those various regional governments. And then the third thing is, they're a good way along on their funding this year. They're 60% funded for this year. They got a big funding need coming up in July. But I think it's a case of muddling through, and there's a lot of, we are focusing on one number in the markets, the deficit target. Will they hit the deficit target? And that's really the wrong number to focus on. You've got to look at the details that are going on behind, and conversations with various investors in meetings suggest that they feel concerns about Spain are somewhat overblown. And once we get through the negotiations with the regional governments over the next 3 months, that they expect things to look rough during this period. Remember, the tactic has been from the European authorities to keep the heat on until changes have been made. And that happened with the change in the Greek government. It happened with the change in the Italian government and the installation of the technocratic government there. Now it'll be the case, perhaps, for Spain keeping the heat on the regional governments until those changes are made. There's a lot to be done, but I just don't think things are as bleak as the markets are trying to price in.
If you had a lot of money, would you buy some Spanish government debt right now?
I don't have a lot of money.
Lucky for you. You don't have to answer the question.
That. Took that out.
Indeed. All right,
but if I could borrow money at 1% from the ECB, that would be a very different matter.
That's another story, indeed. All right, maybe we'll work something out. I want to thank you very much. John Ryding joining us as the co-founder, economist, RDQ Economics. And my thanks to Alix. Always a pleasure to have you with us. I know I'm going to see you tomorrow at the floor of the New York Stock Exchange.